What's up, guys? Welcome to the show. Today we're here with the Bitcoin ETF.
Well, we do know that I guess the 19B4 was approved.
And there was 11 Bitcoin ETFs that were approved. Hit the like button down below, buddy.
Very surprising. I was doing an interview with our partner 21 Shares, and the tweet came across, and we were all, what? And I saw the logo, the Bitcoin logo in the SEC verified tweet. And then I saw Gary Gensler's picture, but I didn't know it had been hacked. It just was odd.
That is funny.
It does appear it has not derailed. I'm sure some security folks at the SEC are having a tough day, but this has not derailed the process.
I think it's very reluctant that they've even passed these ETFs. So to make such a tweet would be a little bit strange.
Many people have been saying there's going to be a sell on the news. This is up too far, too fast. And
I've personally felt like this was the day it was going to happen. Bitcoin is at 46,000, almost 46,000. That seems like it's maybe pulled back a bit. She is one of the people who has applied for this ETF, a spot Bitcoin ETF. What is a spot Bitcoin ETF? One is trading futures of the of Bitcoin, which is what they already have. And then the spot ETF is actually the price of Bitcoin. It just makes a lot more sense if you're holding Bitcoin long term to potentially hold a spot ETF versus a futures ETF. Some ETFs you own gold, they're actually gold. You're actually buying gold that's sitting in vaults somewhere in the world. This will be essentially like you're owning Bitcoin. Just know that this is actual Bitcoin that you're going to be putting in this ETFs versus a contract for Bitcoin or for futures of Bitcoin.
Until the SEC blessed this. And we've had a lot of our clients and the gatekeepers were not going to allow Bitcoin, even what we did own, GBTC, they would not allow in portfolios until the SEC blessed it.
So the GTBC is the Grayscale Bitcoin Trust, which is not an ETF. So you could already have bought this. And so there becomes a much more of a hurdle for people to hold trust in their portfolios versus an ETF, which is very easy to trade daily. Whatever you want to trade it, you can trade it. Sometimes 24/7, right? Some ETFs you can, put your orders in whenever.
Because you've got Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin. And 15 million of those are in the hands of what we call strong hands. They're not weak hands, they're strong hands. They haven't moved their Bitcoin in roughly half a year. And we can monitor this. So 15 out of the 19 and a half. And the number of Bitcoin ever that will be created is 21 million units. So again, I think you're going to start to see scarcity value playing a big role here. Well, there are a lot of retail holders did not want to go through the friction-filled process, or they were discouraged from it, to get a wallet and figure out custody and all of that. This is going to simplify all of that.
Substantially simplified. If you've ever bought an ETF or a stock, you can buy this Bitcoin now.
It's easy access. And I think a lot of people are waiting for easy access.
More secure for sure. If you self-custody and you lose your codes, you're toast.
And now, of course, we do all kinds of things on the internet. This is going to simplify, take out a lot of middlemen that are there really to control risk, but also they take a toll.
That's kind of interesting that she says, we're here to take out middlemen. I don't know. It's because you're now adding more layers of middlemen into the process. If you just bought cryptocurrency on the blockchain and self-custodied it, there's no middleman at all. So maybe that's what she's talking about. But when you put Fidelity or JP Morgan Chase or whatever, BlackRock, in between you and then the ETF, and then that there's a third party custodian, seems like a lot more middlemen. So
more of a peer-to-peer network. So we think there are going to ultimately be billions of users on this network.
There's already been a lot of talks between like fees and what it's going to look like. And some people think that the fees are going to be even lower than if you just went right to the custodian and done it, if you just get it through the ETF. Because there's so much competition between each of these ETF holders. You can do that. I mean, this seems like a no-brainer to hold it in the ETF versus a place like Coinbase or Kraken or some of the ones that have gone under recently, FTX.
Of course, in 2022, there was all kinds of crisis and it didn't do well. But what happened during the regional bank meltdown in March of last year? The regional bank index, the KRE, was imploding. Silicon Valley Bank, Signature, Republic, other banks went bankrupt.
Huge banks.
Bitcoin
Huge banks.
went up almost, well, I think it went up 40%, right in the middle. What did that tell us?
Oh my gosh, there has been so many terrible, terrible, terrible stories from people putting their money into the cryptocurrency space, more reverse mortgage, taking out loans, and awful, awful, awful outcomes. And then the custodian goes under. They put all their money in FTX, for example. Maybe it's a better place to hold it than directly with a custodian, especially given all of the things that you've seen. So maybe that's what people are waiting for. Super easy to now get this ETF into your IRA. This was very difficult before. You could self-custodian this situation and put it in an IRA. And there was very specialized businesses out there, not getting hurt, but are probably going to be losing some business, because before that was kind of the only game in town. Now with this ETF, it's going to be so easy. I can imagine, like, I don't know what the barrier would be to just simply take your money and put it in this ETF in a Roth IRA or in 401k Roth. That's going to be huge, because if there's like the growth that everybody thinks is going to be, and in 10, 20, 30 years, whenever you're going to retire, that happens for you, wow.
It's very interesting. Many people use that argument when they're talking about everything we do during the bear market. And it was one doozy of a bear market for our strategy in 21 and 22. Many people said, well, the only reason your strategy's ever done any well is because interest rates were at zero. That's absolutely, and we're not going up. That's absolutely wrong. I've been in the business for more than 40 years. And our kind of strategy has done well in rising interest rate environments as well. In fact, in 2017, when interest rates finally did start picking up, not only did our strategy, our flagship strategy, was up more than 85%, but Bitcoin, as interest rates went up, went crazy in 2017. I think it went from $1,000 to $20,000. So your interest rate argument has not panned out through all of history, but truth will win out. The earnings power of our companies and the value of Bitcoin, the first global, digital, decentralized, rules-based monetary system in history.
Whoa. Kathy. If it's the first, how do we know it's going to work?
I've been waiting for this since they closed the gold window in 1971. A rules-based monetary system.
Can anybody do this? I mean, could have anybody done this ever? Where they were just like, hey, we are going to now create a rules-based system where if you can transact on this blockchain or whatever it was, and then in and out, and it's like a vending machine type of situation where it's like you punch in the number and you get the coin kind of a thing. Could have anybody done that ever? I mean, that just seems like crazy, because I want to think that the government at some point would just say no. So is it like it's just like this time period that the government's okay with it? You can technically make it illegal. I think that China did that, and maybe they found that it was hard to make it illegal because of just the way that the system is.
Monetary policy is unhinged right now. This is a rules-based monetary system. I said, wow, that sounds like a very big idea. Remember, this is 2015 when Bitcoin is $250. How big of an idea is this, Art, Well,
$250.
how big is the monetary base? At that time, it was $4.5 trillion. Now it's $7.7 trillion. This is a very big idea. Right now, Bitcoin's market cap or network value is a little over 800 billion. We think it has miles to.
Think about the people who invested in it back then. You know, the thing is, you can always think like, oh, this person, they invested so low, but then they sell it, you know, and then they never see it all the way through. But if you invested in like 250, I mean, wow, what is that at this point? Crazy, crazy numbers. All of the like little like, I don't know, investment clubs or, you know, somebody out there just is killing it, that you would never expect. You know, they just like invested super early, just like a random whim. They just got lucky. It's a lottery situation for some people, you know. And then there's the people who I've heard stories where people have it on their laptop and they had the code in the laptop and the laptop died and they couldn't recover it, or they threw it away in a flash drive. There's somebody out there's looking through the junkyard for a little flash drive because on the flash drive has a bunch of Bitcoin on it and it's worth millions, hundreds of millions, I think, dollars on it. You know, it's just wild. And somebody someday, can you imagine coming across that? Who's got a metal detector or something? They hit that flash drive. What a crazy scenario. What a crazy thing that would be to find.
The scarcity value of institutions pushing in now that there really only are going to be 1.5 more million Bitcoin minted ever is going to be quite provocative.
Okay. One question there on the recency part relative to.
There's only 1.5 million to be minted. Doesn't that seem like not enough? Like we've already pretty much done it. I mean, that's going to take a while, I guess, to actually mint it because of the whole way the algorithm works and how they have to mine it.
So we actually think that as more investors evaluate the pluses and minuses, and they can coexist, of course, gold and digital gold, but especially the younger people who are native to the digital world, they're probably going to opt more for Bitcoin than they will for actual gold. Go to our website, arc-invest.com, and you'll see all of our research, prolific research on Bitcoin from our early days. From 2014 was our first piece on how disruptive it was going to be from a technology and perhaps financial point of view. And then we moved into the role of money that it could play, so means of exchange, store of value.
You know, it's honestly the research like that. I mean, it's interesting. Like if you're like, you don't know if you think it's a real thing or not, then, you know, do the research. You'll probably be persuaded. But seriously, how's the research going to help you know if it's going to go up or down or whatever? It's like such a guess.
And then we moved into studying, could this be a new asset class? And back to your former point about correlations, stay tuned. Period. And the correlations to any other asset over the last 5 years have been very low.
I've heard a lot of people say that it is not super correlated compared to other assets. You know, markets a lot of times seem like, you know, if the economy is doing well, the market's doing well, and it's much easier to invest when the market's doing well. If the market's not doing well, you know, it's hard to invest really in anything.
Yeah.
We did though. Yes, where? We did.
Which part?
In the regional bank crisis.
NASDAQ was up too. NASDAQ rallied back.
It rallied back, but go track the behavior of when Bitcoin bottomed and how quickly it rebounded and how much time it took for the NASDAQ to do that.
I mean, zero for how long?
Zero?
6 months or $1 billion, whichever comes first.
Wow, okay.
Which will be like,
one other thing that I haven't really seen covered anywhere, I don't know if you've disclosed it, if you'd be open to talking about your own personal crypto or Bitcoin investments.
On the ETF?
Folks like Scaramucci have been on here the last couple of years. He's kind of given us hints that, like, outside of his real estate, he's pretty heavy into crypto. Can you give us an idea how much your net worth or how much?
Private funds or crypto, primarily Bitcoin. And I would say this is going to be a very rough guess because
sure, no problem.
I don't really. Yeah,
I'm surprised
my guess is
don't ask me
that
what my net worth is.
Excluding ARC, the company, and excluding real estate, that of the financial net worth, it's at least 25%.
Okay. Kathy Wood,
Bitcoin is at least 25% of her personal, which it's tough to like compare, like Warren Buffett. You think that we should be all investing like Warren Buffett? I mean, I don't think so. You're brave enough to get into that space, 25% of your portfolio, there could be some massive reward for you, or other things, right? Could go the other way. So just be prepared. I think that one thing with having a more diversified portfolio, less wakes in the sea of investing, right? And yeah, thanks for watching. Once again, if you could hit the like button, subscribe.